Hope so. Um, well, I don't know where Larry is, but we'll just go ahead. I take it I have audio. Okay, and we have the recording on. Okay. Wow, we're all set. We're all set except the data coming into my Ninja is frightful today. Well, anyway, I wanted to go over the morning and a few things. First of all, I want to talk about this VIX and Friday afternoon. I know last week, every day, I kept telling you the VIX, the VIX, the VIX, and I'm sure a lot of you thought I was insane, which you wouldn't be wrong, I can tell you that for sure. But anyway, Friday we had the VIX up around 28, and Friday afternoon going into the Globex close for the indices and everything else, the markets just started selling off by the handfuls. So this morning, the VIX popped up. The high today on that VIX was 53.29, and that is astronomical. I mean, it's in nosebleed territory. The VIX is important because it is the index of the volatility, the volatility within the broader markets, and it's referred to as the fear index. So when that gets higher and higher and higher, there is enormous fear out there. And what happens with fear? Everybody wants out. They're running for the doors. So what happened, what we all experienced today, is what's called a limit down. And this is the result of our wonderful government trying to protect us, but there are SEC regulations that govern this kind of thing. And some of these regulations were put into place after the so-called stock market crash in the 1920s. And the purpose of this was that to stop a panic. The purpose of this was if the market starts to go down a certain percentage, then they will halt trading on it for a specified amount of time depending on the percentage and the amount. This can happen in the broad indexes, and it can happen in stocks. If there is a huge drop, it will only go a certain amount and they will halt trading there. The purpose is to avoid a complete and total panic. So as we saw this morning, as soon as the time frame was lifted, because I didn't pay that much attention to how long, etc., then they resumed trading, and the whole purpose of this is everybody takes a breath. Everybody gets a little focused on reality instead of panic. And as you could see, then all of a sudden it's like, okay, well, the world isn't coming to an end today, and everything started to go back up. Of course, with the exception of crude oil, which began to chop around for a while. But if you notice, as everything went down, the bond market was going up. Those two trade opposite of each other, so watching bonds is always a good thing if you're trading any of the indices. And as soon as trading resumed, bonds started down. And what happened to all the indices? They started climbing. So the VIX is still, by relative standards, at 33 and change. It's almost 34. It's 33.78 right now. That is still a high VIX because this has been, it's been in a range between 10 and 16 for quite some time. So the expectation would be that until the fear dissipates, which isn't likely very soon, the market bias will tend to be down. If you do not know the Apex rules for the strategy you're trading, I would suggest you just stop everything and sit down and learn those rules, because this is a time when if you break the rules, I'm pretty sure it's going to hurt. Stay with the rules. This system will work, but you cannot break the rules. You have to have discipline. So let's go back over and take a look at any possible oil trades. The data, my task manager tells me that Nedge is running, and I'm kind of like, well, that's fine. I'm glad. So why don't I have any data coming through here? But I'm going to scroll back and look at some of these things while they're fresh in our minds. And then Lori's going to come on and talk about this. Lori's the Discovery. She's the Discovery Channel. She's going to come and talk about this potential wonderful new thing she's been testing. And I, for one, am extremely interested in that. But if you go back here this morning and look at the early morning and overnight, all you see is a bunch of red apexes and a bunch of red MVPs and red everything, and oh, good grief. But then when this started down, you could have taken this if you were real brave. This red dotted, this is a big magnet for the week's low. If it continues to go much farther below this, I'm not sure what we will expect, but then when you're trading, you can't be sure of anything. You can't see the screen. Ezra, the camera's on. Does anybody else have that problem? I don't know. Yeah. Ezra, you may have to log out and log back in, and it should come right up. And Aaron posted a post off of the CME that lists out this, you know, where these circuit breakers are to close this thing off. And that's a good thing to have in your trading notebook or wherever you keep little tidbits of information that might come in handy someday. I think everybody in this room has been around long enough to figure out that whatever is or was isn't, and you never know what is going to happen next. And anybody that tells you that, oh, well, the market's going to do this and the market doesn't do that, I just kind of put my hands over my ears and take a good look at what your indicators are telling you. This morning I saw a post in here from Mike. I know we have Mike as there's a lot of Mikes, but I mean the Mike that posted about how he was trying to get a better feel for the major streets. One of the easy things to look at is this 10-minute chart, because you can look right here and see in just an instant that the settlement is way up here, and this market has moved 1 deviation level, 2 deviation levels. Below that, don't expect it to go down to 3. It has happened, and it could happen, and it might happen. But when you see crude oil or any other market get down to this 2 standard deviations, not standard, I'm sorry, apex deviation levels, it likely, the bus driver has gone about as far south as he's inclined to go. So we'll see what happens. It's one of those handy things to know, sort of like going into the close, Daryl likes to say most markets will revert towards settlement, whichever direction that may be. But if you get back where you can see this, it becomes a lot easier to find those main streets on a chart with maybe not so much stiff on it. And this was very tradable if you adhered to the rules, knowing when it came down to the 2 deviation level here, this is the -2 deviation, and then you could be looking for an upside swing. Well, if you could take this off of here, right here at the level, fine. You could take it all the way to the next deviation level. And I think if you look at Trendcatcher, it gave you an entry right in there also. So anyway, this is all doable, but you have to pay attention. For those of you who are trying to learn to mark your charts with the correct trend, this green E here has a matching green MVP, but it is number 1 of the green reversal. So that is noted as number 1. What we need is number 2 with the matching, and we got that right here. So this is a valid trend direction signal right here. It's changed. And there are lots of places you could have taken this with the rule. I looked at this. I was a little concerned about it because it's going into this sell zone right here, so I declined to take that entry for that reason. But when it gets up here to another big sell zone, and you're right here at a street, these zones kind of fiddle with the colors we've got, but this is I believe the high of last session. I'm not sure, but it's one of the high low open. Oh, it's today's open. That's what it is. Today's open. It's a cyan under there. But taking this back down, then you get an MVP, a red MVP over here. You could have taken that down maybe to the power line or the deviation. These are a bunch of significant streets right in here. So this all starts to make sense the more you observe, and today's been a good day to observe. I wanted to tell you one other thing. This 30-minute chart is not sitting up here for decoration purposes. When you see one of these candles like this one, right, let's see, I don't know, I guess you need I need the pointer on this, don't I? Here, the 30-minute. When you see these candles form with these wicks, real big wicks, one way or the other, then watch for the next 30 minutes, because this was an indication that it was going to come off of the low of the day so far, right here. And then notice how it went right to today's open and backed off. So everything's on here for a purpose, and we just need to be careful. As long as this VIX continues to remain high, this does not happen except once every so many years, and it's the professional traders have been waiting for this. We're going to see next week after Labor Day. I think Labor Day this is the last week we have before Labor Day, and the big boys are back in town. It's going to be very, very interesting. So be sure you try to get your act together this week, because there's going to be some wonderful opportunities. So let's hand this off to Lori, and she's going to talk about this new thing she's working on, and maybe we can all test this with her and help her too. So let's see. Any questions for me? I think that's okay. Ask Lori. I'll see you at 2:30. Thanks.